Last week, Australian dollar yen and the 10-year JGB yield reached a convergence point. Congratulations to those who made a profit. Now let's move on to this week's forecast for the financial markets from October 27 to 31. With President Trump's visit to Japan this week, there is a possibility that the yen exchange rate will turn to a stronger yen. This prediction is based on a statistical analysis of more than 200 weeks of data, covering 17 different financial markets including currencies, interest rates and commodities. Let's take a look at the convergence points or profit-taking targets for this week from October 27 to 31. USD JPY is 150 yen and 26 cents, Yuan is 175 yen and 8 cents. AUD JPY is 98 yen and 38 cents, the Nikkei 225 is 45,788 yen, the Dow Jones is $45,988, the 10-year JGB yield is 1.67%, gold is $3,958. According to our model, market prices are likely to stabilize around these ranges. At the end of last week, the Consumer Price Index CPI showed a calmer than expected inflation trend. In response to this, U.S. equities surged to fresh record highs. And markets are now pricing in 2 interest rate cuts by the end of the year. Short-term Treasury yields have started to decline accordingly. The key event this week will be President Trump's visit. His meeting with Prime Minister Takaichi is expected to strengthen and reshape a friendly and constructive Japan-US relationship. Our channel anticipates that Japan will accept the U.S. policy direction toward interest rate cuts and Treasury Secretary Bessent's stance to correct the strong dollar. As a result, the USD JPY, which is currently near 153 yen, the pair may have reached its ceiling, raising the likelihood of a shift toward yen appreciation. From the U.S. perspective, a stronger yen could encourage greater Japanese investment into the American economy, a politically and economically favorable outcome. For Japanese Takaichi administration, correcting excessive yen weakness is also a pressing issue. According to 2022 data, imports of oil, natural gas, and other energy resources totaled around 20 trillion yen. While Japan's trade deficit reached 19.97 trillion yen, meaning that most of the deficit stems from energy imports. A narrowing of the Japan-US interest rate gap, together with yen appreciation, would help improve Japan's trade balance and contribute to overall price stability. The Takaichi administration is focusing on short-term measures such as gasoline tax cuts. It should help stabilize prices by reducing transportation costs. For the time being, until fusion energy becomes available, Japan plans to restart nuclear power plants to lower electricity costs, which should help boost the country's economic strength. In the long term, joint U.S.-Japan investments in Alaska's natural gas production and pipeline projects make sense, as they can bolster economic security by ensuring a stable energy supply. As Japan and the U.S. deepen cooperation on multiple fronts, this week is expected to mark a turning point from yen weakness to yen strength. Quick disclaimer: the projections presented here are derived from a statistical stability convergence model based on long-term market data. This analysis is for informational purpose only, and we accept no responsibility for any investment decisions based on this forecast. That's it for this week's market outlook. We will continue to provide forecasts based on data and statistics. We would be happy if you could join us again next week. Thank you for watching.